Welcome back to the Tax-Free Strategy, where we help you to save on taxes so you keep more of what you earn. It made breaking news, and yes, we are still talking about it. On July 4th of this year, the One Big Beautiful Bill, or so it's been called, was signed into law. And it completely changes how you have to think about planning for and filing your taxes. I know, more tax changes means more headaches, more frustration, more confusion. Well, if you position yourself right, you can turn what looks like an obstacle into an opportunity. So, today, we are breaking down some of the most important updates and how you can use them to turn your tax season into wealth season. Number one, the lower rates from the Tax Cuts and Job Act were made permanent. This preserves the 2017 tax brackets at 10% to 37%. Why is this important? Because it caps the maximum amount that you will be taxed on your earnings at 37%. Did you know that in 1944, the maximum tax rate was 94%? Yes, 94%. Now that 37% looks pretty good, eh? Number two, the standard deduction increased again this year. So if you're single, you can deduct $15,750. If you file married filing jointly, you can deduct $31,500. I don't know if anyone remembers the personal exemption where you could deduct a certain amount for each person in your household. I missed that. But this permanently replaces that personal exemption. Number three, the SALT deduction cap was raised. SALT stands for state and local taxes. This was increased from $10,000 to $40,000 that you can deduct up to. Why is this important? You know that little line on your paycheck that says state income tax deduction? Well, you can deduct all of that up to $40,000 from your federal income taxes. Now, take that and add on top of that real estate taxes, personal property taxes, other local taxes, and that can really add up. Number four, no tax on tips and overtime. This is a big win for service and hourly workers. It's kind of a misnomer. It's not that there's no tax on it, but there's a deduction for up to $25,000 in tips and overtime pay for workers making under $150,000. Unfortunately, Social Security and Medicare taxes still apply, but you do get the deduction for the federal income taxes. Number five, the auto loan interest deduction of up to $10,000 a year. Now, previously, you had to be a business owner in order to and take advantage of an auto loan interest deduction. Now it's open to everybody, up to $10,000. But of course, there are caveats. So it must be a new car, no used car. It must be financed at the time of purchase, and it must be a U.S. assembled vehicle, meaning the assembly happened in the U.S. Did you know that if the VIN number starts with a 1, 4, or 5, that means it's a U.S. assembled vehicle? So check that out, see if you qualify. Also, make sure the timing is right. It only applies to loans taken out after December 31st, 2024. So nothing before that is going to work. And it phases out over different income limits. So be sure to check that out. Number six, the senior citizen deduction. Now, this is a beauty. Seniors age 65 and up get a one time $6,000 deduction now through 2028, and it's automatic. You don't even have to fill out another form. That's great if you are 65 years or better. Number seven, MAGA accounts. Now, this is not the same MAGA that you hear about in the news. This is Make America Grow Again. And what this means is that every child born between 2025 and 2028 gets a $1,000 starter gift from the government. And get this, parents can add $5,000 a year, tax deferred. So Be sure to be with your tax planner and your financial advisor to take advantage of that tax deferred growth and tax free withdrawal. Number 8, another goodie for parents. The child tax credit has increased to $2,500 per child. It does revert back to $2,000 after 2028, but take advantage of that now. Number 9, beware. The clean energy credits phase out by 2027. Solar and wind credits end by 2027, but electric vehicle tax credits are phased out by September 2025. Electric vehicle charger credits end mid-2026, so you will have to act fast to take advantage of those old clean energy tax credits. Number 10, business and manufacturing incentives. Good news for entrepreneurs. The 100% bonus depreciation is back. One of my favorite deductions. You can have paper losses, but not actually come out of pocket, but still take the deduction on your taxes. And there is enhanced Section 179 expensing. And there's a 35% available for manufacturing and data centers as a credit. Number 11, the 1099 reporting thresholds have been raised. So, if you make less than $2,000, there's no need to be issued a 1099. This applies to Forms 1099 NEC and 1099 miscellaneous. This reduces the small business filing burden. So, go ahead and start your side gig now. Number 12, speaking of businesses, there are more business incentives. First up, the 199A Qualified Business Income Deduction, or QBI, has been made permanent, and the wage and capital limits have eased. It's fairly complex, however, it's great if you can qualify. We do have another video coming up that goes into detail about how to maximize this QBI deduction. Part 2, the business interest deduction has been recalculated using EBITDA, increasing allowable interest expense for business owners. Take advantage of that one. Also, the research and development expense deduction is restored to immediate write-off for domestic cost. So this means that any amount that businesses spend in research and development can be deducted in the first year of business. That is great. We do have another video coming out that goes into detail about the R&D expense deduction. That's a good one that is usually missed by business owners. Number 13, estate and trust adjustments. The estate tax exemption has doubled. So now it's time to start your trust and legacy planning. There's more flexibility for trust planning, and it's likely to sunset after 2026. So get started with the planning now. That was a lot of information contained in that OBBB. Let's see, big, beautiful bill or big, bulky bill. But let's summarize. Number 1, permanent lower tax rates, bigger standard deductions, tax-free tip and overtime deductions, Make America Grow Again account for kids, estate exemption increases and more flexible laws, energy credits are ending, more tax strategies and incentives for businesses, and fewer 1099 headaches. So, what are you waiting for? Start planning now. Adapt to the tax changes. Use the tax code to your advantage. Implement now. Don't wait. Don't be left on the sidelines. So what's next up? Well, subscribe to our channel. Hit the like button if this added any value to you. See you in the next video for more tax saving strategies. Turn your next tax season into wealth season and visit thetaxfreestrategy.com. Thanks for watching.